Hey there, this is Alex Kluge, and I'm here from Toronto Home Experts. And I'm here to dive into the May 2023 Toronto real estate market update. Okay, lots of chat with you about this month, lots of news in the real estate world, and happy to jump into these numbers. First and foremost, let's talk about interest rates. So the Bank of Canada just raised the overnight lending rate by 25 basis points, meaning the prime rate now offered to variable rate mortgage holders is 6.85. So that's the highest we've seen the prime rate since 2001. Caught a lot of people by surprise, including many economists. But inflation is being a little bit stubborn, and Bank of Canada is basically committed to fighting inflation, and the best way to do so is by managing the overnight lending rate. So basically, what we're seeing now is the Bank of Canada reacting to some unexpected increase in inflation. So, I guess the Bank of Canada is caught between a rock and a hard place. Their position is, it's certainly worse to have inflation is worse than high rates, right? So the high rates is hopefully or higher rates, I should say, is hopefully temporary, and that'll hopefully bring inflation rate down. But really, the comments from Bank of Canada this month were quite interesting. I mean, the way I read them is I think we're going to see at least another um, rate increase this year. I don't know when. I guess it really depends on what inflation data we see throughout the summer. But could we see another rate hike in the next few months? I think that's most likely. Could we even see two? Possible. Possible. I mean, the bond market's really only just pricing in one, but I think depending on what we see over the next few months, two is not out of the question. So why is that such an important thing to talk about this month? Well, as we know, increase in mortgage rates decrease buyers' purchasing power. So we're seeing buyers' purchasing power erode as rates increase. And so not only did variable rates increase, but because of the inflation data, also fixed rates increase. So basically, we're starting to see the effects of these rates increase. I mean, it's just happened this week, but I think we're going to see it's going to impact the June numbers and certainly the July numbers, and take away some of the seasonality involved. And we're going to dive into those numbers obviously when they come out. But I want to just plant that bug in your ear as we're talking about the May numbers, because typically in a normal real estate market, I would say, we typically hit the peak when it comes to sales price, or average price, I should say, typically is in May. Is that happening this year? Most likely. And I'll talk to you a little bit why as we kind of dive into some of those numbers. So sales volume is a great tool to just measure overall market activity. And compared to where we were last year in May, we're up 24%. So not exactly surprising, given that May of last year was, sort of I shouldn't say the fall of the market of the peak. Really, that started in March, but we saw volumes significantly decrease in May and June. So, but really, if we're comparing from last month to this month, sales volume is up 19%, which is great. I think that's certainly encouraging. So we're seeing supply of homes rise, and also therefore sales volume rise as well. And so I personally expect we're going to see inventory rise for June, because we did see a little bit of a delay in the start of the spring market. Really, if I'm being frank, it didn't start in April. April was really, really low, and we talked about this during that video, that really it's a delayed spring market, and we saw it in April because of the inventory was so low. But inventory is starting to get better, and I expect inventory to rise, which will provide a little bit more balance in the market. So, am I saying like prices are crashing or anything? I'm not saying that, but I'm saying, did we see the peak of the spring market in prices this past month? I do. I think we're going to see a little bit of kind of sort of rounding down, so to speak, when it comes to the market. And typically, if you look at a normal year, like prices rise in the spring, they come down a little bit in the summer, and then they come back up in the fall, right? So that's typically what happens in a normal market. We're now in a rising interest rate environment, so we can't fully expect that same trend to happen. But I'm really, really curious to see where the inflation numbers come in and some of the economic data that's about to be released. Okay, enough about the economy. Let's talk about these numbers. All right, so new listings are down. So that's relative to last year, right? Last year we saw new listings rise because there was perhaps some fear in the market that buyer or sellers were looking to take advantage of perhaps the end of the price appreciation that we saw very significantly that spring. But you know what? In terms of where we are in new listings, we're up considerably from where we were last month. So as I said, that's good news, right? Good news in the sense that we're now seeing greater balance because prices have been escalating very rapidly since January, and I think interest rate rise that we are now seeing is going to put a little bit of a dampening effect on the market, which I think overall is positive. So active listings are down, where we were from last year. Not exactly surprising because as the market was changing, we saw listings rise, and now as the inventory levels are so low, a lot of the inventory is being absorbed. But again, I'm going to see some. I'm predicting that we're going to see some of that change in June numbers, and I'm already starting to deal. We're in the first. We're now in the first week and a half of June, and so we're starting to see that already. But again, really want to dive into those numbers when they come out. Okay, so average price is what everyone wants to talk about, and there's been a lot of press. So this is very surprising. I would not have predicted this in January, even February this year. But from last May to this May, we are down only 1.2% average for the Toronto Real Estate Board. Now, that is very surprising. And if anyone who's been watching these videos knows that really with the lack of inventory that we've had, that's put a significant upward pressure on price. And so just for context, from January of this year to present, the average price for Toronto real estate is up 15.2%. So that's significant. I mean, we can't have that. I mean, that's over 5 months. We can't expect that to continue. So again, this is not a predictions video, but as we see inventories rise, that puts dampening pressure on price, and I fully expect that to be happening because really the theme of what's been going on the last several months has been lack of inventory, stabilization of interest rates, although that's now changing a little bit, and because of the lack of supply, we really see an upward in price. So anyways, the curious thing is what's going to happen next. We don't know, but I'm fascinated to see kind of where the prices go vis-a-vis rise of inventory and rise of rates. But I do expect there to be a little bit greater balance in the market, which I think certainly buyers appreciate more balance, but sellers have been enjoying the last several months because there's been not much competition on the market when they are selling their home. Okay, so GTA average home price. So this again going to surprise many. Basically, where we were relatively speaking. So we're not quite at the back of the peak, but look at the graph here on your screen. We've made a pretty significant comeback in terms of price. Really, the low of the low is, as I was saying, is sometime in December, early January, and we've been seeing a steady climb back up. So we're basically at the same price we were in May, which is unbelievable. But really, what's more interesting is okay, well, what's happening with some of the local markets? What's happening by district? And I think that's probably the more interesting story as well. So. Okay, so average prices in Toronto when we're looking at from May 2022 to May 2023, prices in Toronto are basically flat. The other regions outside of Toronto, like the 905, are down a little bit more, relatively speaking. But at the end of the day, I think what I've been seeing over the last month is that really Toronto's been leading the charge when it comes to the average price increases. And a lot of the regions in the 905, where anyone following the numbers and also this channel here, the 905 really was leading the pack when it came to average price increases during the pandemic. So it's not exactly surprising to see the greatest declines during that period of time, the last year, came from the 905 region, right? So, if we look at, average prices, really Toronto's been the most active. And I think that's going to normalize at some point. I'm not expecting Toronto to be always, but I think there was a little bit of an overcorrection, I think, in the 905, which is where I think we're going to see, greater price convergence moving forward. Maybe not next month, but certainly by the fall, that's my expectation, right? So anyway, so super interesting. Okay, so I know there was a lot to unpack here, a lot of interesting numbers to share. I hope you enjoyed this video. I think the next few months are going to be fascinating from a number standpoint. So make sure you tune in, because if we're going to see continued rate increases, we're going to see certainly a shift in the market, and something that we're going to want to keep track on. So thank you so much for watching again this month. Feel free to reach out with any questions. We're always happy to help. And thanks again, and we will see you next month. Bye for now.